is FG Chatterjee recording our weekly session of Chartsarefun. This is for the week of August 10th, recording this on the afternoon of August 16th. Our Substack site where we publish daily blogs is chartsarefun.substack.com, and then our YouTube channel is also at Chartsarefun. We do believe there are tremendous fun insights in the charts. We don't provide investment advice. Our goal here is to share some technical patterns, some interesting insights on charts that you could use for your investment decisions. Today we can talk about the technology ETF QQQ, talk about it hitting a key resistance level. So we can see here that if you draw the line across the previous tops, it's at a descending kind of a higher, lower highs is what we see, 747, 745, and more recently around 734. And as it's hitting that trend line, we can see that potentially it could lead to a pullback. However, if it breaks higher, then we could see a nice cup and handle, 726 to 661 as the bottom of the cup, back to 728, a shallow handle pullback, and then a breakout. When we got this breakout from this cup and handle, notice volume did not shoot up. Whenever you get cup and handle breakouts, the key thing to observe is volume increasing, is volume breaking out higher, indicating money momentum moving in. So that's a bit of a red flag that if this was a true cup and handle, that measured target is over 795, by the way, 661 to a 728. You're talking about roughly $67. Add 67 to 728, that takes you to 795. If that was a true cup and handle, we would have expected to see strong volume here, which didn't quite happen. Notice that MACD is kind of flattish. It's not breaking out to higher highs. So the signal line, however, has broken above the zero center line, which is bullish. The signal line in black is crossed above the zero center line and climbing. That part is bullish, but the histogram is kind of flattish, and RSI is hovering around that 50 to 60 level. It hasn't broken higher towards the 70 yet. So this could turn out to be a near-term resistance that the market could be looking at. That said, if you look at two of the largest holdings of QQQ, also the largest market cap stocks, let's look at the AI king NVDA. NVDA shows a beautiful double bottom pattern. We can see that double bottom at 189.8 and 190.01. Approximated at 190, that's the two bottoms. And from that double bottom, it broke higher. So 189.8 to a 214. Roughly, you're talking about, say, $24 or so added to 214. That takes us towards 238, 239. That's potentially where NVIDIA could climb from this W-shaped double bottom pattern. We can see that RSI is hovering around the 60 level. We expect RSI to break higher as this continued move happens. And we can see that MACD, by the way, a nice way to say that this is a true double bottom. One is as the second bottom forms, you want to see positive divergence. And that's confirmed with the MACD. You had a higher low in MACD as the second bottom was tested at 190. So that's a bullish sign. RSI was kind of flat. The first low to the second low RSIs was about the same level, but MACD clearly at a higher low indicating positive divergence. The other thing to confirm the W-shaped double bottom is you got to take a move above the tip of the W, and that happened with a gap. So when we saw in early August that break higher from the tip of the W at 214, it left a gap, which is a bullish gap, and since then is climbing. So you got to see if this gap comes and closes, if the NASDAQ hits near-term resistance. However, if it continues to climb, NVIDIA's earnings is like maybe 8 trading days. All of next week and the following week, Wednesday of the following week is when NVIDIA's earnings is, which is on August 29th. So if there is bullish numbers with respect to, they're going to definitely beat numbers for sure, but key is what the projections are. If they continue to maybe blow out expected projections on their revenue and earnings, as well as, kind of indicate strong, we know that the capex is already strong. Most of the hyperscalers have announced strong capex, but if NVIDIA announced strong margins and from their GPU generations continued demand for it, perhaps though NVIDIA has a pattern that after earnings it pulls back. So we got to see if this target near 238.39 is met before earnings. In that case, having met the target, we could be setting up for a pullback. Apple, which is the second largest market cap stock, also is forming a nice W-shaped double bottom. However, like NVIDIA, it has not yet confirmed the W because it has to close above the 316, the tip of the W. That said, 299, 300, so a slightly higher low from the previous one. So 300 is turned out to be strong support. Double W-shaped double bottom here. It needs, if it breaks above 316, that measured target is 332, which would basically close the gap from end of July, that gap that was left after earnings when it fell. So that's something for us to watch. Is Apple going to confirm a W-shaped double bottom? For that, it has to close above 316, and NVIDIA already has kind of confirmed its W because it has broken higher above 214 with a gap, which is bullish, and also with that positive divergence. So NVIDIA is more of a confirmed W shape. The key is then will it meet its target, which is closer towards 238, 239. Now, the semiconductor ETF has an interesting kind of call it, broadening pattern where if you draw the lower lows and the lower highs, that's kind of a broadening wedge. And that broadening wedge in this case, column is almost an inverted wedge, but that broadening pattern is right where it's testing a key resistance, which is also its 50 period moving average at 562. That's exactly where it met on Thursday, and then on Friday it pulled back. So if that 561, 562 are draw neckline, this is the left shoulder from there to 498. Then the head formed from 561 to 464, back to 562. Maybe we get, because the market is at a key resistance level as we showed on QQQ, maybe if we do get a pullback in the next few days, ahead of NVIDIA earnings maybe, and then maybe the NVIDIA strong earnings causes the SOXX, the semiconductor ETF to break higher, then that could be a buying opportunity, assuming it doesn't break further down. So you got to watch volume on the pullback to complete the right shoulder. And so if we do get a 464 to a 562, that's roughly $98. If you add $98 to 562, you're talking about roughly, 660 or so is where that target is. That would be above the 655.95, the peak of June. So that's potentially a possibility on the semiconductor ETF. The software, which is the other key technology sector of QQQ, is also testing a key trend line from declining highs. At December at 110, the 108 that we saw in late May, and then the most recent high at 106.75. We pull back from there. So that's a key downtrending, declining highs and rising lows. If this breaks higher, of course, IGV could have a higher upside. Last week, we heard some key bullish news on the software sector with Workday getting a private equity bid, and that caused the Workday stock to shoot up and bringing overall momentum. We know since Microsoft's earnings, Microsoft gapped higher, did extremely well after earnings, and that's adding momentum to the software stocks in general. That said, IGV, the software ETF, is hitting key resistance, and that's what we're going to watch. Maybe we get a pullback and from there a breakout higher. If that comes from a 94 to say a 106 that you're talking about, roughly 12 to 106, 118, which is the previous high of IGV from last year, is potentially a possibility for IGV to test. So that's something that we're also looking at. But if you look at now complacency in the market, let's look at volatility with the NASDAQ 100 volatility called VXN. We see that it tested 34 twice, one in late March. That's when the market had bottomed, and one more like towards the like mid to early June. From there, it has been declining, which has helped the Nasdaq move higher. However, RSI is getting oversold. In fact, more oversold than we've seen in the entire last 1 year. From you can see here, RSI never got as oversold towards 33 in the last entire year. And then the MACD we can see is even more oversold than the last couple of turning points in MACD. We can see in the December and then see in the April timeframe when MACD turned higher. Now MACD, the signal line is at a lower low from here. So VXN, the volatility is kind of a bit oversold. We could see a volatility climb. And the other key level to watch is if we continue to head lower though and market keeps climbing, volatility to come back and test that December level of 17. It's already broken below a key support line at 21. We see that April low of 21.1, early May low at 20.97. Recently, it kind of broke below that. So we can see that the low was 20.57. It opened at 21. So it broke below that key 21 support and closed the day on Friday below that at 20.7. So we got to see, because we know that there is oversold on MACD and RSI if we do get a climb, but maybe that climb could fail and then a continued downside if we get continued upside in QQQ and continued upside in Apple and NVDA and the semiconductor ETF and the software ETF. Another sign of complacency is the CBOE, which is the Chicago Board of Options total put call ratio. That, if you draw the 10-day moving average, in a span of 3 weeks, literally, like from late, or in fact, if you kind of hover over it, this was, in fact, that peak that we saw was last day of July, 30th July, right? From that span of the last 2 weeks, we can see that put call ratio has dropped. This is the 10-day moving average from about 0.96 closer to the 0.81. We can see that's where the moving average is at. Where do we see typical rebounds? The put call ratio at a peak, by the way, indicates that there's more put buying. That typically happens when the market is kind of at fear levels. It's at the bottom, and put call ratios bottoming out typically means complacency. It means market at a near-term top. We can see that in the past, anywhere from 0.78 or lower, put call ratios 10-day moving average reverses higher. So we see that level in early 2025. We see that in kind of towards May of or June of 2025. More recently, we see that in the June timeframe, and in the past as well, we can see several times in that 0.78. Around that level, it tends to reverse. Now, let's forget the 2020. That was COVID. At that time, there was tremendous upswing from the market with all the Fed-induced liquidity. There, we even saw from the huge snapback, the put call ratios come down even as low as 0.7 and lower. But that was just a misnomer. In general, that level of 0.78 is something for us to watch. It's not too far. The 10-day moving average could continue to decline in the next few days and retest at 0.78. That's a high sign of complacency in the market. The SPX or the S&P 500's put call indicating its options, and the VIX, which is the volatility indicator on the S&P 500, just like VXN is the volatility of NASDAQ 100, VIX is that of the S&P 500. That is also declining. And as it's declining, if you draw a trend line across the lower lows, from the April at 16.87, the May at 16.18, the June at 15.18, the July at 14.96, and more recently, it's now below those levels of the last several months at 14.25. It's heading towards what we saw in the beginning part of the year, towards the January. If this declines, it's possibly come and test this trend line, the declining trend line of the lower lows at that 13.38 from December. It's a possibility that VIX could come and retest that. That said, there is positive divergence in MACD, higher low in MACD, and that's potentially possible that VIX could retest that, and then from there we could see a volatility climb. But there again, volatility coming from near 21, 20.88 towards that 14 handle, 14.25, and getting close. The low of Friday was 14.18, so it's getting close to a 13 handle. Retest those 13 levels like we saw from December is a possibility, indicating complacency in the market, indicating tremendous amount of bullish interest in the investors is what we are seeing. So with that, just to sum it up, we are looking at QQQ potentially testing a key broadening trend line, the lower highs, testing it, and then from there pulling back on Friday slightly. We can see NVIDIA with potentially additional upside from a W-shaped double bottom towards 238, 239. Apple, if it can close above 316 from its W-shaped double bottom, can go to 332 and close out that gap from before earnings. Semiconductor ETF has got kind of a broadening wedge shape pattern. It tested its key level of resistance, which is also the 50-period moving average at 562. With the complacency in the market, if we do see some form of a pullback, a right shoulder pullback towards the 498 could be a buying opportunity, assuming volume is muted, not like aggressive selling going on, and then a breakout with NVDA earnings is possible later into August, into September, and potentially the Jackson Hole speech from the Fed could perhaps be dovish, giving market a chance to rally post that meeting. So late August, by that time we could get to see the right shoulder pullback and then a climb higher is a distinct possibility. And same thing with the software ETF IGV, testing a very key, declining drops trend line, pulling back on Friday. We could see a shallow pullback, maybe that gap close out near 100, and then from there break higher. So that break higher from a 94 to a 106, you're talking about 12, actually not 94. This is actually 84. So 84 to 106 is $22. At 22 to 106, that could take it to 128, actually above the October low high of 118, October of last year's high. So that's a possibility for us to watch on this. This could potentially lead to a breakout pattern. That said, RSI had recently not taken out the previous strength. It was weakening. And from there, this pullback is what we're going to watch. Volatility on the NASDAQ is come down a lot. The RSI and the MACD showing deeply oversold levels. So potential climb in volatility in NASDAQ is possible in the near term. The put call ratio also shows high complacency, a sharp drop of the put call 10-day moving average from 0.96 towards 0.81. We see in the past anything around the 0.78 is from where the market gets a climb back of the put call ratio, which often ensues with more put buying, and hence the market seeing some form of a pullback is what's possible. And with the VIX, which is the S&P 500 volatility, if it has to test its trend line, it could head towards the 13s, retest that level of December, and from there maybe market could see a near-term top and then a sell-off. But that said, we have to just be careful that we are hitting quite complacent levels, and any kind of political news or any kind of fundamental news with respect to the market could cause a little bit of a shakeout, a little bit of a sell-off, and then from there maybe another climb into the end of the month. Good luck investing. We'll talk to you next week. Thank you for listening. Appreciate hitting the like button if you liked the video.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.